Hello everyone, welcome to Officer 24/7. My name is Niharika Valia Bhatnagar and I'm with you with the area of ABFM. Okay everyone, what's about today's class? Module C. You were dealing with the Module C. Now, let's begin with the session. Module C has good number of topics. But always remember, if you're really doing Module C, it is something which you cannot do without Module B. The main module is Module B only. If you know the Module B, then Module C is easy. Otherwise, this specific module is such a challenging one that you won't be able to understand. So the basics has to be absolutely clear. Okay, with this, we start with the session. First of all, please like the session, share it among your peers so that this session reaches out to maximum number of people and we have a class where we are having more or less maximum shares. Okay, chaliye. In the context of DCF, everyone, this is related to the discounted cash flow valuation. What is primary difference between DDM and FCFE models? Dividend discount models and FCFE. Dividend discount model uses actually the dividend area, and FCFE talks about the entire funds that you are receiving, right? So the first is DDM uses free cash flow, while FCFE uses dividends. DDM considers cash flows to all claim holders, while FCFE considers only equity investors. DDM focuses on future growth patterns, while FCFE focuses on current cash flows. DDM is applicable to private companies, while FCFE is applicable to publicly traded companies. What's going to be the answer? The answer is DDM is B. DDM talks about dividend discount model. Dividend discount model matlab the model which is, see, discount is the money that the shareholders get. Dividend is actually the money, the part of profit which is received by the shareholders. Okay? And then we talk about FCFE. FCFE is the part of the particular profit of the business which is with the shareholder. ठीक है ना? Done. So this is free cash flow left over after meeting claims of debt and preferred. This is very easy. Why to make it so difficult? Simple point. Dividend is the chunk of profit which is given to the shareholders, while FCFE is the total amount which is in the hands of the business, because first of all, outsiders are paid, taxes paid, that means interest is paid, then taxes paid, then we pay our preference shareholder, and then we pay our equity. The sequence is, first of all we pay to interest, then we pay off our debts. This is for the debt na, debt interest, then we pay the tax, then after tax whatever is left, then we pay to the preference shareholders as promised. They are paid before equity. And the last one is we pay after preference, we pay equity. This part is FCFE. After FCFE, the part of dividend which we share with the shareholders is dividend. See, this is the entire sequence. As you can see, the sequence is very different, है ना? Acha, very good news everyone. Our sale is going on. If you haven't taken up the courses yet now, then please go ahead and take up the share. Okay? Enroll yourself in the particular classes as early as possible, because I think from 13th of February we are starting with another batch. We are starting with another batch of our course there. So please go ahead and check it out on our website or in our app for further details. It is right now having 80% discount. Okay? Which factor is more likely to contribute to sustained growth for an extended period? Which of the factors? General sources of growth, competitive advantage like the well-known brand, or management competence, or first mover advantage. uh, First mover advantage is if I create something which nobody else is doing in this particular market, and that gives me a time where before anybody else enters, I rule the market. For example, fidget spinner. ठीक है ना? uh, but they didn't get it patented, so ultimately it didn't really help the one who designed it, though. So let's take another example. General sources of growth, sustained growth for an extended period. Acha, everyone, do you know Nike is still going on? First point which I would definitely go for it is the specific case where we talk about Nike's brand. The brand is so good. They have established their name in the market to that extent where people are following the brand. है ना? That means they have the competitive advantage. Now, this is the reason. Next point. Competitive advantage like the well-known brand name. The price to book value multiple is derived from the stock metric, namely book value per share, which is obtained from the balance sheet. Then is reasoning. Book value per share is calculated as shareholder funds minus preference capital divided by the number of outstanding shares. True and R is correct the explanation. Well, we have two things, assertion and reasoning. Okay, now is it better? Go ahead and answer, everyone. PB multiple. This multiple is actually better than sometimes PE multiple. Kyunki na, sometimes when the market is not good, then PE multiple is not a good base. When PE multiple is not a good base, we have no other option to move towards PB. This is you take price, the market price per share, and you take the book value below. This particular chapter is something that I strongly believe is very important. MPS upon BP, book value. This is the point. Okay. So when we talk about this stability, book value is normally never negative until or unless the organization turns into a SIC unit, because in SIC unit you'll find the net worth being negative. Otherwise, in almost every organization, this always be positive. So what's going to be the answer? This is derived from stock metric. Indeed it is, because first thing is market price per share and book value per share is calculated. That is shareholder funds minus preference share capital. Agreed again. From the funds you remove the preference shares even. Preference shares are also outsiders. Don't treat them as insiders, because these people are also there. Like if the company is having money, I am there. If they are not making money, then who are you? They are also set with this. Only true owner is equity shareholder. Nobody else can be equity. The answer is A. What is the value of an asset proportional to when all the factors are held constant? Uncertainty of the cash flows, the level of risk associated with the cash flows, the volume of cash flows, their growth rate, the level of risk associated, and expected growth rate of the cash flows. I think we have done the similar kind of questions. All the factors which are related to an asset. What is the cash flow that we are receiving? Because why would I buy an asset? If I have to buy a new laptop even, I'll buy a laptop because it should be helping me in earning more money. If it is not helping me, why would I buy a new laptop? Again, if I'm a business person, I should be thinking about my business first, right? The volume of the cash flows, their growth, and their level associated with risk. What components can be added together to arrive at an estimate of the company's value? Net present value and intrinsic value, continuing value and book value, value of free cash flow, continuing value and non-operating assets, or salvage value and residual value. What components can be added together? What components can be added together to arrive at an estimate of company's value? Net NPV or intrinsic is it's a part of the book value and today's current value of the business that we have to see in the future. Continuing or value or book value, and then is value of free cash flows, continuing value and non-operating assets, or salvage and residual. The answer should be C. We'll be finding the value of free cash flow, we'll be finding the continuing value as well as non-operating assets. ठीक है ना? We'll consider all these things together. Next point, what is that one approach to estimate the area of valuing of intangible assets such as brand name? There is not only one brand name, trademark, copyright, they're all covered in this. Market comparison, capital investment, revenue discount, or barter system. What's going to be the answer? Which of the following approach is to estimate the value of intangible? Market comparison, then capital investment, revenue discount, or barter system. Barter system is you give up one asset and buy the another one. So in this case, the correct answer is, when you're trying to find the intangible assets, now it is related to the area of capital investment method. Because in any specific business, you will be investing your money first. है ना? Done? Next question. What portion, this is actually different types of merger. What characterizes a generic merger, everyone? Everybody? What is that? In the area of generic merger, merging companies produce similar products. They produce operating in the same market sector. Merging companies have no fundamental connections, and the goal is to avoid the lengthy procedure of IPO. The goal of IPO is definitely there, but this is a part of reverse merger, right? So in this case, the correct answer is merging companies produce similar products. I produce a specific product, you also produce a specific product. So in this case, we have something in common. Done? Then comes the next point. What is a reverse merger? Oh, we have just discussed it. A large publicly listed company acquires a smaller one. Smaller one buys a larger one. The focus is on expanding it. Or merging companies have a buyer-seller relationship. They do, but actually merging is basically not buyer and seller. They're two equals coming together. I'm sorry. In terms of a reverse merger, the smaller fish will eat the larger fish because the larger fish has a reach which the smaller doesn't have. ठीक है? Done? So in this case, the correct answer would come out to be the smaller B. A smaller company which is unlisted would buy the larger one. What do you mean by slump sale, everyone? If you buy some other organization na, and you are accepting its good and the bad things, it involves specific valuations of each category, or the shareholding structure changes significantly, capital gains from slump sales are subjected to income tax, or it is completed for a single sum of money without specific valuations. The correct answer to this question is we actually buy the entire organization's assets and we value them together. It is completed for a single sum of money. That is called it a slump. ठीक है ना? Next point. In the purchase of a division or a plant, the uh, acquiring company takes over all the assets and liabilities. The acquiring company pays compensation. Division of a plant, purchase of a division of a plant. Okay, you're just buying one division or one part of any organization. A fraction of assets and liabilities are taken over by the acquiring company. A selling company continues to operate independently. The correct answer is a fraction of assets and liabilities is taken over by acquiring company. Purchase means to acquire. Simple. ठीक है? Next point. In a make or buy decision, what is the key consideration when deciding whether to produce a component in-house or purchase it from an external supplier? Acha, let me give you an example. This is one of my favorites. I think I've given this to in your class earlier as well. Coke decided to make the bottles in its own plant because they found that the Coke production, bottle of the production in their in-house was easier than buying it from outside. This is what they actually did as well. In the make or buy decision, this is the key consideration when deciding whether to produce the component or in-house. You always have to compare the production price. Okay? You are like production price with your purchase price. Done? So in this case, the correct answer would come out to be the historical cost of producing the component, or the book value, or the expected contribution margin from selling the component, or the actual cost of production compared to the purchase price. The correct answer would be oh, the correct answer in this case would be the actual cost of production compared to the purchase price. Because in this case, the correct answer should be the actual cost of production. Okay? Because always remember, we are just a moment. I think there's some issue with the question. नहीं ठीक है. In this case, we are actually producing the thing in our organization na. So what is it? The cost that is coming out. If the production is cheaper in our organization, why don't we actually buy it? Why don't we actually just buy the raw material and continue our work accordingly? है ना? It is cheaper. Done, everyone? The correct answer would be the production cost should be less in our area. Only then it is worth it. Otherwise, it's not. Done? Okay. So, this is where I think we can end our class with this particular session here itself. Done. Now, before we proceed further, let's open up our website and I'll just show you where to go as the sale is going on. Everyone, go ahead and purchase our courses. You just need to go on to the website. This is where you will find it. That is www.adda247.com. Open up our website. As soon as you will open up the website, this is what you will find. Go on to the area of JIB and CIIB. In the area of JIB and CIIB, you will find it in the CIIB June. Okay? In this area, you will find the double validity is going on here. Not only double validity is going on, but 81% discount is also going on. So what you need to do is go on to the area of buy now, click on the area of Y541 and purchase it, because this is available at a very less price right now. The price that you will get is 68.23. Rather, this will come down to at least 600 something rupees again further, because you have a discount of 68 rupees roughly to be reduced further. This would be 6700 something, as you can use the particular app and you can accumulate the coins and utilize it further. So technically you will get bilingual English medium, you will get test series, you will get ebooks, you will get 1106 videos. At the same time, you will not only get these videos, but you will also get the revision classes of all the subjects as well, including the elective papers, and you do not have the access to only one of the electives that you choose. You can look at any of the electives, you can watch all the electives and choose the one that you want for yourself. Okay, so technically this is related to the area where you just need to go onto our website, where you can buy the course, past, present, future, all the classes for the next 1 year for CIIB. Every single class is opened up for you. You can attend any class as you would wish to, and you will have all the test series, you will have optional all the subjects, you will have mini marathons, Mahapacks access. So if you're planning to purchase all these things now, then do not wait. Hurry up and buy it now. Thank you so much, everyone. We'll be meeting in the next class. Bye bye. Okay, before we end the session, there it is. Use the code Y541 and